And
Hey,
that's,
Nathan.
yeah.
Nathan, I hate to interrupt, but there's a couple of questions in the chat that I'd wanted to
Oh,
bring up because I noticed have been asked a couple times, and I don't know if you'd seen it, so sorry about that.
no, thank you. I was sharing my screen, so I didn't see that. Let me switch over.
It shows recording now, but it wasn't prior, so I think someone started recording it.
Oh, thank you. All right. Okay, so the 6 months projection adjustment is where you're going to put your estimate of how much you plan to spend for the rest of the year. And we're going to go through a lot of these different rows showing how you would go about projecting the last 6 months of expenditures. Redirects are where you're going to transfer some of your cost over to a different program code, like through ETRs or expenditure transfers. And then the next column I it's a formula that adds up what you've spent so far plus your encumbrances, pre-encumbrances, and your projections to get a total expenditures for that line. And then the available balance is another formula which takes your budget and subtracts your projections to give what's remaining. And one of the more critical columns is column K, which is a description of how you made that projection. We'll give a little detail on that as we go, but it can be as simple as straight line projection. Like we spent $500 in the first 6 months. We think we'll spend another 500 based off of our current trend of spending. We have a couple other documents that are important for projections. One's called the lag letter. And I will pull that up for you. So the lag letter gives a description of if there are any delays in expenditures being posted. So when December closes, you could see like this temporary help, there's a 1 month lag. So what's showing up in the expenditures to date is 1 month behind what's actually happened. So if you're doing a straight line projection and there's a lag on that projection, you'll have to factor in that what's on the report is only 5 months. So you need to project for 7 months. And there's a lot of different account codes listed on the lag letter. The other document that we'll be going over later on in the presentation is the shared cost spreadsheet. And this is new this year, and I think it's going to be extremely helpful because it lists out a lot of items that are spread throughout the department. It includes like rent, security. There's some grant costs, like for grant programs, there's a grant coordinator that's spread out through the department. So you'll want to take a look at that as you're going through your projections and see if your program code shows up in any of those shared costs. And with that, I'm going to turn it over to Prashanta, who's going to start out demonstrate. Oh, one other thing. Sorry, before I send it over. The insert row. If you need to insert a row, highlight where you want the row to go and click this little button here. And a new row pops up. It's highlighted in yellow to just make it stand out for the budget office as we go through and review it. So we know that row is inserted. But if there's a category that's not listed on your projections and you think there will be a cost for that category, insert a row and then just fill it out like you would the other ones. Like you'd fill out G, H, and K. And now I'll turn it over to Prashanta. And I'll stop sharing my screen so she can take over, unless she already did. Okay. Cool.
Hi, my name is Prashanta and I'm the budget analyst. I'll go over the salaries and benefits and touch on redirects as well. So here on the first line item here, you see it's civil service employees with a budget amount of 7.9 million. So in order to start calculating the salaries for the 6 months, we pull up the labor report. So I have the most updated labor report right here. And I already filtered it to the program code we are, the sample program we have. So first you would want to filter column K to earnings permanent. So that's the first one we're working on is earnings permanent civil service. Filter that. And then here on column L, you see the monthly salaries that are for this program. And so specifically, we did the pay period for December. Here, I also filtered that out so we can all have monthly salaries for a specific month. And then there's also MSA dates, the merit salary adjustments. You can contact your budget analyst or HR to find specific dates because some of them do impact the salary. So in order to find the 6 months salary for per month, so you would multiply one of the monthly salary and multiply by 6. And you would drag that down all the way for the program that has all the monthly salaries for. So this is a big program here. And then I have the sum down here. So I would copy that sum and put it to column G. Oh, that's not. So there's a budget line item here that's a negative amount on earnings. So that would most likely be a redirect to a different program or within the division or a different program. You just have to make sure you put in the methodology that the program code, whether it's with a different program or not. So make sure it specifies the exact program code it's going to and from. So make sure to communicate that with each of the programs. So here's $458. And then, yeah, you would put the program code here where it's redirecting to. And then we just put the 6-month projection for the salary, which is pretty much like a straight line because it's really similar to year to date. And also the MSA dates, if there are any differences, make sure to just include that in the methodology as well. And then for temp help, this one it depends on your program. Like if you would have a temporary positions for the next 6 months, it does fluctuate depending on, the need of it. And it's up to you. So let's say that we do want the same amount of temporary positions. So you would just go ahead and straight line that. And if your program does not plan to have that, then you would just have a 0, or if you want to decrease the amount of positions, it all depends on the hours the temporary positions do work on. So for now, we'll just have this straight line. And then there's also overtime. So that depends on your program as well, if there needs to be overtime for your program and if they need if this necessity for it during that time. So we would project that there is overtime for the next 6 months. So you could straight line that as well. Okay, and there's another overtime temp help. So that's also depending on your program. let's say you don't really need this, so you would just say like 0 if you don't need it for the time, or it's only this year to date was only a one-time cost. You can just go ahead and put one-time cost. And here you notice there's a negative year-to-date amount. So that would be most likely a redirect to a different program. So you would go ahead and write that as well. And mention which program this is going to as well. That it just make sure on the methodology that it includes the program code, and make sure to communicate that. And so it shows on both ends. And then same here, another overtime. Let's say there's a one-time cost, so you could just put that as a 0 and put this as one time here. Holiday earnings. So this is about 1,600. This one could also be a one-time cost, depending on the program. Holiday credit buyback. So you could say this is 0. Well, this would be a one-time cost. Flexit contribution. So this can be a straight line as well. It's kind of like a benefit as well, even though it's in the salary section. So this can be a straight line. And we could put that in the comment as well. A lot of these would be straight line, just depending on how your program is projecting. Employee payments can be one-time cost, so that can be a 0. Here, one-time cost in the comment, in the methodology, and then another employee payment, so that can be also a one-time cost. You don't plan on continuing that. So the next is a salary and wage recovery. So this amount most likely is a redirect that goes to another program. And you make sure to mention the program code is redirecting it to, and then from, if it's coming from another program. Moving on to benefits. So a way to calculate, I think the easiest way to calculate the benefits is by dividing the benefits by salaries. So I already have a formula here where the sum of all the benefits down here, it goes all the way. Oh no, that's not right. It needs to be only till the benefits, staff benefits.
Real quick, Kimberly asked a question in the chat. If we should project leave buyback this year. That's something the budget office does on a department-wide level. Because whatever we do, it has to be for the whole department. We can't say this program can do leave buyback, this one can't. So we do a projection, assuming different levels of participation, and then we compare our estimate of the cost to what's available by fund source, and then ultimately the executive office decides whether or not we're going to go forward with leave buyback.
Thank you, Nathan. So yeah, we're dividing the benefits by salaries, and so we have the benefits here, and then dividing it by salaries. Included all the earnings on it. Well, you can multiply it by just the earnings if that's easier. By the 6-month projection. Oh no, sorry, I got a little confused. That's not right. We do divide it by benefits. So it's 42%. And then, so the 6-month projection for benefits, I have the formula here already ready to go, where I have the 6-month projection for the earnings that you have created from the labor report and multiply that with this 42%. That's the calculation we have. And then this one says, you could paste that here. 1 million, 1.3 for benefits. And then now, since you already have the calculation here, you could apply that to your projection. I think that's about it. Also, I wanted to touch on like new employees. So with new employees, you have specific new employees, you could pull up the classification from pay scale. So let's say it's let's just take a random position. So it's admin assistant. You would add the minimum plus the max and then divide that by 2 and then multiply that by 4 in order to get the where to go, in order to get the projection for that for the new employee. So we can move on to general expenses.
Okay, so I'm gonna go through a couple of the OE&E categories to give some ideas of how you might project different things. And before I do that, let me take over the screen. Before I do that, I want to mention that for certain categories, like Prashanta showed how to go through each of these individual codes. If you're straight lining everything under something like salaries, you can just straight line the whole amount and not go through each individual one. But like with salaries, a lot of times it's difficult to do because you might have some vacancies. You know you're going to hire someone in the next 2 or 3 months. You might have MSAs and stuff like that. So on the salaries and benefits, it might make more sense to go line by line. But for some of the OE&E, like operating expenses and equipment categories, like general expenses, you might want to just, for all the general expenses, we spent $8,381. So then we'll just put $8,381 here. Just making the assumption that we're going to go through, or we're going to spend the same amount that we already spent. And you don't need to go through each individual one under general expenses if you're going to straight line them all. But you do want to make sure that those expenses are going to be straight lined. None of them are like one-time cost, like dues and memberships. A lot of times those hit at certain periods of the year. So that you might have done all your dues and memberships already. If that's the case, you'd back out that from your projection, your straight line projection. Okay. So the first thing I would do if I was doing this projection would be to go through that one-time cost document and look to see if any of these expenditure object or codes, account codes, show up in that report, because otherwise you might be trying to figure it out when those numbers are already available, easy to project. You just pull the number from that report and plug it into the projection line. So general expenses, usually you can just straight line unless there's something very specific like those dues and memberships. Printing, most programs, they can use a straight line projection, but some program codes have like a really big print job that they do once a year. And if that already showed up, straight lining it would overestimate those costs. If they haven't shown up and you know they're going to, you're gonna have to factor that in already. You'll want to add a comment. So like printing other expenditures to date here was already 9,000. So if it's that one big purchase, you could, and you're not going to do any more big ones, you could put in 0 for the projection, say one time print job. And when you're filling out the comments, you want to just give enough information where we understand your methodology for that projection. There's no wrong or right answer as long as it gives us an idea of how you came to your projection. And most of them will be straight line projections. Cell phones is usually pretty easy, but one thing I should be checking in on is the lag letter. Let's see. So we see that there's cellular telephone service has a 1-month lag. So if we go here, we can add a formula equals, so this is 5 months of expenditure. So you divide it by 5 and then we're going to project 7 months. So you multiply by 7. And yeah, another good idea is when you're starting out is to even go through the lag letter and do some of these first, just because sometimes you forget to go back to the lag letter, you forget which ones are on the lag letter. So if you go through and do the lag letter ones first, you won't miss any of them. So let's see, is there any private telephone service on there? That's 4,700. So this one has a 1-month lag as well. So it's the same formula as that one. So I just copied and pasted the formula. Vehicle insurance is already paid. So that's an example of like, there's going to be a one big cost that comes in and we don't want to project any more costs since it's already been paid. So that's 8,700. You can see it's 33. So here, oh, and I should mention on the comments for this, straight line plus 1 month lag. And that's enough for us to know that you're just doing a straight line projection and building and accounting for that lag. And situations like the insurance that's already been paid one time per lag letter. So really, it's just a matter of going through the expenses, figuring out if it's like a monthly cost that's consistent month to month, and if not, telling us what could be different and from the straight line and projecting based off of that. In-state travel, that's one where you're going to have to go and say, like the budget office, for instance, we don't travel very much. I know I might have a couple trips coming up in the next 2 months. For the budget office, we have 0 expenses, but we'll have to add in some projections for those trips. For this program code, it looks like they travel a lot. It could be a program where you do inspections, regular inspections, and a straight line might make sense for that program since it's every month you're doing a certain number of audits, inspections, whatever. And so it really depends on the program, what program's doing it. Let's see, are there any others that stand out? Training is one that doesn't get spent very often. There's been $535 spent so far. And this is something where you have to figure out, do we have like some major training coming up? Are we going to do any more? Can we say 0 for this or straight line it? It would be up to you on how to do it, but you want to just note either straight line or one time and move on. Facility operations, a lot of these will show up in the one-time spreadsheet. Let's see. So yeah, actually, this was pre-populated for rent, building, and ground state. So this is probably 1220 in street, which is on the one-time spreadsheet. And David's gonna, our budget analyst David is gonna go through some of the one-time costs after I get through here. Indirect cost, the budget office has shown this as fully spent, and that's what everyone should be doing. Or actually, we've already done it, so you won't have to worry about that.
Nathan,
Yes.
there's a comment in
Oh.
the chat. And it says, it's from Erica, and she says, I see a small difference in the vehicle insurance from the projection sheet and shared cost. Do I just add the difference in the projection row for my program?
Yeah, I would go with what's in the shared cost spreadsheet. If there is a big difference, please notify the budget office right away, because sometimes when we're dealing with this many categories, something might have gotten missed, either most likely in the one-time spreadsheet. And we can investigate what's happening. And if there is an error on it, we're going to want to let everyone know right away so they can use the correct cost for that. But thank you for that question. I'm trying to find where we got a note saying that the Adobe Acrobat Premium is going to cost $75 per license. So please consider that when you're working on your projections.
We'll
And that's
also send you
probably-
a reminder about that.
Yeah,
today.
the
Your
analysts are
analyst
gonna
will
send
send
out.
you a reminder today.
I think the last thing we need to go through on here would be the unallocated OE&E. Not every program has one this big. There's usually some level of unallocated expenses. Usually you want to zero this out because, I mean, you don't, not zero it out, but you want to put a 0 there because this is something, for some reason, your budget, when you add up all the other categories, the budget is like, the total comes to 2.474 million more than what your program actually has available. So this is like a plug to bring you down to your actual authority. And we did what was called admin adjustments a couple months back, where we sent out worksheets to programs, and that gave them an opportunity to adjust their unallocated budget and spread that negative throughout the rest of their budget. But some programs will have these unallocated budgets. And if you have specific questions about it for your specific program code, please reach out to the budget office. We could walk through it, tell you how that came to be. Because usually it's through moving staff around. Like if you had positions moved into your program code, their salaries get budgeted, but sometimes they don't move the dollars along with the positions. So that ends up bumping up your unallocated code. And I think I'll turn it over to David, and he can walk through the one-time cost with you.
Okay, thank you, Nathan. Good afternoon, everyone. I'm David Bott. I'm the budget analyst for admin exec, marketing F&E, and Pierce's disease. And let's see. Let me share my screen. Let me pop these up. I'm not good with sharing screens. Let's see here. Hold on just a second. Sorry, everyone. It's not showing spreadsheet. Yeah. Mhm. Sorry everyone. Let's see. Let me try it again. Okay. There's that one. Okay. Can you guys see that or the sample
It has,
program
it has
spreadsheet?
the, yeah,
You see it?
We
Okay.
see it.
yes.
Okay. Okay, great, great. And thank you. And please bear with me. I've been due to health issues and whatnot, I haven't done this in a couple of years. So I'm a little rusty, but I definitely can show you what I know and get answers to your questions. What on the PC the shared cost spreadsheet, for example, can you see that? Is that showing up?
No, we
No,
just see
it's
your,
showing
Not the
up
shared cost.
background.
your screensaver. It's very beautiful, but I don't,
Oh, I don't know what's going on. I
So
always
if
have
you
a hard
move it-
time with sharing the screen.
Yeah, David, if you move that spreadsheet
Mhm.
into the one that has the web browser, there we
There you
go,
go.
and then maximize it there.
Oh, you see it now? Okay. Oh, okay. Okay. I thought it was the other way around. Okay. Sorry, you
Yeah.
guys. So this is the shared cost spreadsheet. And what this is basically the shared cost that, all the programs share. For example, if you look at the bottom, the first tab, 1220 N Street rent, and basically everyone pays a bit of that. So what you would do is on your mid-year projection spreadsheet, if you see any of these program codes, like for example, this first one, 0002 plant, it means you do have a shared cost. So you would have to incorporate this into your projection, okay, on the other spreadsheet, the mid-year projection spreadsheet. And if you look, it's kind of broken down January to June. So it's got the monthly rent. So it's pretty straightforward. But there is another thing that has to do with the rent itself that I need to tell you, a little complication. These first three tabs on the bottom, 1220 N Street rent, 1220 N Street cages, and 1220 N Street central plant, those costs all get added into rent on the state rent on the spreadsheet, the mid-year projection spreadsheet. So you're going to have to, count those into there. That's where they go. And then you also have other tabs for security, key card, confidential shred, so forth, so on. But beyond that, it's basically straight line projection. These are, for pretty simple. So you just do the 6-month straight line projection, and in the notes, please put in SL projection, straight line, so we know how you did it. Beyond that, I don't know of anything else what to say. Does anyone have any questions for me?
I'm sorry, I don't know if I'm
If not-
totally, I have a question. Sorry, I don't know if I'm totally
Sure.
clear. So you're saying the first 3 tabs, we add
Yes.
those up and they go into one line on the other spreadsheet that we were just looking at. Is that right?
Yes, they go into like the N Street rent, N Street cages, N Street central plant. Let me pull the other spreadsheet over. It gets those costs get included onto this spreadsheet, your actual mid-year projection spreadsheet, under line item 82, rent, buildings, and grounds. So it's included in this year-to-date total. Does that make sense?
Yeah, I wanted to make
You
sure
did-
I knew what was being combined. Yeah, thanks.
Sure. Yeah, of course. And so that's where that would go. Now I don't think the other ones are like that. I think the rent is the one that's like that. But of course, if you have any questions, please feel free to reach out to the budget office, your analysts, and we'll definitely make sure to get you answers and help walk you through everything. And then let's see, I'll go to the other spreadsheet. So you just do the same thing. Once you get past the first 3, security, for example, there's 0002 again, plant. So they have that. So they need to add these costs for security into their straight line, their mid-year projection, which is let's see where to go. This one, yes. So it would go into the security line item, which is somewhere right around here. It's
I think it's around
little up
42 to
or-
43.
42. Yeah, I thought it was a little up. Thank you, Nathan.
It's
Yes,
up
there you
higher.
go. Number 42, line 42. So you would need to include that cost into this projection, please. Because that's
Okay.
something, you know, you're going to be paying the next 6 months for. So, and then just do the same with the rest of the shared cost items. There's all these tabs. So if your program comes up on it, that means they're paying a portion. So it does need to be included on the actual projection for the rest of the fiscal year.
I have another
Um,
question.
Sure.
Sorry.
No, not at all.
I'm now opening the spreadsheet
Uh-huh.
and looking at it, understanding better what it is. On the grant
Which one, the
coordinator,
mid-year? Your
no,
mid-year
the one that you're
projection?
looking at, the shared
Oh,
costs.
shared costs. Okay, sorry.
Yeah. So I'm looking at, like, for example, I have a grant coordinator tab on mine,
Okay.
and there's
I
just
see it.
one column, that total. Is that the total over the year? Is that for one half of the year?
That's the annual cost.
Okay. And maybe this is getting too in the weeds, but I'm trying to figure out why one of our codes 66 would have such a high cost relative to the other ones that's not commensurate with workload.
The $32,000.
Yes.
I think it was
That-
based off of the number of planned awards, but I'll look at the backup for that and get back to you, Tony.
Okay, yeah, there's no way that program has as many planned awards as the other ones.
Yeah, that does seem high for conservation ag
Yeah.
planning.
Okay, thank you.
Yeah.
Okay, no problem. And does anyone else have any, or you have more questions, Tony, or anyone else? Anything else I can explain for you right now?
I think I'm good right now. I'm sure I'll have more later.
Oh yeah, well, please, like I said, we're all available. Please don't hesitate to reach out. We're here to help and you know, get this done properly for
Thanks,
all of us.
David.
Okay,
Nathan.
you're welcome. Thank you.
As
Mhm.
we're
We have
going
one
through
more-
it. Oh,
One more question in the chat, Nathan.
okay. Can you read that, please?
Sure. Erica says, I noticed that the account codes on both sheets are different with the ones you stated to combine in one line item. Is there any other line item that will combine?
Oh, for the rent. Let me go back to that tab. Well, let's see. This is the rent. Well, it would be 990002, and then we go down to let's get back to the other spreadsheet. This
Sorry,
one.
yeah, the reason why I asked is because on the shared costs, it has that line account item that says 5150800. And then when you go to the actual projection, when it's being combined,
Oh.
the account code is different. So I just want to make sure,
Right.
because I'm not sure how I'm going to remember to combine all the ones you just said to combine if they're not the same
No,
code.
I think,
I-
so I think it's the
I'm sorry,
first
go
two
ahead.
that needs to be combined.
I
And then the
I was
third
told
one
the
has,
first three. I don't know.
yeah, that's okay.
Okay, sorry.
So there is the account code at the top of the spreadsheet.
Okay.
So
Which one do we need to look at? The shared costs spreadsheet?
yeah, the shared costs, I have it up, I'm sharing it now,
Okay.
David.
Oh,
So,
you're sharing it. Oh, okay.
yeah, so
Sorry.
like the in-street rent and the in-street cages are both account code 4400.
Okay.
And then the central plat's 4200.
Okay. I was just
All right.
checking.
Yeah, no, thank you. Yeah, this is a new document for us too, so we still have some kinks we need to work out. But I think this will be extremely helpful for everyone because in the past, a lot of the hiccups came with how much do we project for rent? What about this cost? And a lot of those are listed out on the spreadsheet. But yeah, if you see something that looks off, please let us know as soon as possible.
Nathan Myrna had a question about the rent, the plant costs.
Can you read the question, please? I don't.
Actually, I saw
pulled
it
it
pop up, but I can't. Oh, you got it. Okay. About the
Okay, and
plant.
to compose, will she?
No, I was just commenting that I was told that the central plant was also included in that rent line item, but I won't include it then.
Oh, yeah, that's what I said. I was told 3, but Nathan said
Mhm.
2, so I'm not sure.
Okay,
Well,
and
I
it
didn't
was
wanna-
adding up.
Oh, was it adding up?
Yeah, I don't know.
It was adding up
So-
We did
correctly
it
for
this
me.
morning.
Okay,
Yeah.
so that's something we
Maybe.
will look, that's something we'll look at. For now,
Okay.
just assume we're gonna use what's on the cost spreadsheet, what item it says it goes on. But we will investigate and get back to you, to everyone
Okay.
on that. All right, thank you. So one thing that I realized I should have pointed out as I was going through this is to talk about encumbrances. So let's look at, let's say, office supplies. So if you, like, let's say we're at the beginning of the year, you're gonna enter into an agreement for $12,000 with this vendor for office supplies throughout the year. So now that we're 6 months through, some of that encumbrance was liquidated, which means it shows up as an expense. So you wouldn't just, straight line this cost, because a lot of these costs were coming out of the encumbrance, and maybe all of them were. So you want to just see if you plan to spend the rest of the encumbrance rather than straight lining what's already been spent. So you could say, well, we spent 1875 so far, so we'll probably spend another 1875. Let me pull up a calculator just to. So we're going to spend a total of 3750 for this category, but we already have 10,000 encumbered. So that means we're going to project that we're going to disencumber the rest of it. So we want to leave 1875 in the encumbrance. So we're going to do a negative 8975 here. Because we're based on what we've actually used of the encumbrance, we don't think we're going to spend all of it. So, and then the comments, you could say, straight line actuals disencumber the unused, or something like that. So, and then let's say we have a situation where let's see, let me find another encumbrance. Okay, so this one right here, janitorial services. Let's say this probably I'm guessing that this is on the one or this shared cost spreadsheet, but let's say we plan to fully spend this. You project nothing because we already encumbered the cost. That means we already budgeted saying we're going to use these costs by setting up as an encumbrance. Plan to fully expend the encumbrance. So when you have encumbrances, you got to kind of evaluate if you think you're going to spend what's been encumbered. And if not, you show a negative kind of saying this is what we're not going to spend. This is going to be disencumbered. All right. So we have about 12 minutes left. Before I open up to just any questions, I want to say I know this is a big lift for everyone. Thank you for the work you put into this. And you should really use this as an opportunity to, plan for the rest of the year. Like, look forward to what you're going to be doing for the last, now 5 months of the fiscal year. Are we going to be hiring positions? Do we have enough available to hire those positions? It's a really great tool for managers, supervisors to use in managing their budgets. And with that, I'll open it up to any questions anyone might have. So I see a raised hand. Chris.
Yeah, quick question for the 0365 licenses.
Yes.
That is distributed by, it looks like division. mostly for, I'm with the biocontrol program. So there's the count of division and then the amount, is that we divide that total by whatever the count of division is and then multiply it by our number of employees for that to determine how much we're getting?
Let me see.
This is IT 0365 in the shared costs.
Oh, and the shared costs. Okay, let me pull it up on my, well, I won't. Oh, yes, that does look like it's shared by division. That one,
Hey, Nathan, this is Celeste with IT.
yeah. Oh,
We already billed for 0365, so that should have already
Great.
been handled during the first quarter, as far as we know, just for the
Okay.
0365 charges. Yep.
Okay, so
Okay,
there won't
let
be any
me-
projections for that then, because it'll all have been included.
Well, there are enterprise costs that are still coming through for the third and the fourth quarter. Second quarter, we just billed out and got the responses. So those are not 0365, but they are Department of Technology charges and enterprise-wide costs. So, I mean, maybe Becky can jump in.
Yeah, hi, it's Becky. And those are not indirect costs. Those are direct costs to your divisions. So, you know, when your division gets the IT month quarterly invoice, those, you know, not 0365, you know, taking 0365 out of it, those would be direct costs to your division. Those are not indirect costs.
Okay, thank you.
Does that make sense? I hope.
I think so.
If not, just
At
reach
the
out to
moment-
us. We'll be glad to help.
At the moment, it makes sense. Thank you.
Okay. Uh-huh.
Yeah. Any other questions?
Nathan, this is Melissa
Yeah.
Johnson.
Oh,
And
yeah.
this might be a silly question. I'm new to all this, but what does ONE stand for?
It stands for operating expenses and equipment. So that's anything outside of like salaries and benefits. So like office supplies, rent, IT costs, just anything outside of the salaries and benefits.
Thank you.
You're welcome. So yeah, anytime if you run across any questions as you're going through it, you can reach out to your budget analyst. We could set up some time to go one-on-one over your individual program codes. We're here to help with any questions you might have and just help you get through these. But if there are no other questions, I will say thank you for attending, and we look forward to getting these and working through them.
Thank you.
Thanks for doing this.
You're welcome.
Thank you.
Hi, everyone. Okay. I think I'm gonna log off, Nathan.
Okay, so Alex just sent the plant CA.
He did.
Yeah,
Awesome. For us to review.
yep.
Great. Jody also sent a response to
Oh.
the SO12 package. We keep going
Okay.
round and around about this org chart.
Oh,
Only problem I see with the org chart, I hope Katie and Irene don't mind that I'm gonna share my screen with you really quick, and it's nothing confidential, it's just our org chart. But this is like the original one that I have that has Sandy reporting to you. But and it's not signed yet, so I'd have to have you sign it. But I'm
Okay.
not here. I'm not here yet. So this was the current in the month of October. Like she was hired, reported to you in October. Then in November, I was hired. So I mean, if we make this the current in our package, it doesn't show me at all. But because this package is not only doing the bilingual status, it's also updating her duty statement and her org chart to be reporting to me. So do you think this would be okay to send to Jody and just ask her, is this one sufficient for that?
Sorry. The animal edits came in. I was just scrolling through real quick.
Oh, okay.
That's, I don't know what that means. Okay. Doesn't look like any major edits. I mean, there are. I forwarded it to you and Prashanta. Okay.
Okay.
So
Oh, good.
it
That's good. There's not
includes
any major.
it includes Sandy, but it doesn't include you.
Right. Because for the month of October, the old one is she reported to you, right? And then I started in November and she immediately started reporting to me. So she only reported to you for 1 month. So I guess maybe that's the one she wants to see.
What was
Because
I?
this isn't currently the reporting structure, but this whole package is not only to get her reinstated, get her duty statement and her everything reporting to me, but it's also the bilingual, right? So
Yeah.
Jody's saying we can't have it to be current and proposed because, but the current, I mean, if you look at the word current, if you think of the word current, she currently is not reporting to you, but she has been reporting to me for the last 3 months, but
But if
this
it
is the
hasn't
way.
been, if it hasn't been on paper yet as her reporting to you, maybe just use this. I think that might be good.
Okay, so does this look okay? I'll send it to you to sign. And then I'll put that back in the package.
Okay. Yeah, I think that looks
Sweet,
good.
thank you. And then I'll look at plant and animal, right?
Yep.
Okay,
cool. Well, actually, just look at plant because I sent animal with Jody's edits to Prashanta and you,
Okay,
but
great.
Prashanta can start working on that.
Okay, good. And then I'll start reviewing the changes that were made to plant.
Cool. Thank you.
Do I have the document that calls out all the edits to plant?
I think.
Was I copied on that? I don't know.
Oh, Alex included it. Because
Oh,
he
good.
made notes on the one with Jody's edits.
That's
Yeah.
awesome. I like
So
when he
it's on
does
the-
that. It makes it so easy.
Yeah, it does.
Sweet. Okay, great.
All right.
Thanks, Nathan.
You're welcome.
Okay, bye.
All right, bye.